Hey guys, how are you? We're going to go over my trade review here today. A couple of winning trades and one real mistake trade that I actually sold instead of buying, and we'll go over that a little later. So first trade of the day was on Facebook here. Take a look at what happened in the morning. Now, market moved up initially, and basically the levels we were watching were the high of the previous lower high of yesterday, and this was on SPY, Apple. A lot of names had the same sort of setup. So basically we're watching Facebook moving up like that. Now this level is arbitrary, I'll remove that for now. You can see that we moved higher first thing, and I was looking to short into any failure, because we do know that when you see kind of FOMO moves straight up like this, they usually don't last very long, and they will trap out any traders who decided that they wanted to just buy in for FOMO, you know? So what happened was I shorted around 945 right here on this break, and as you can see, that was a good entry. In hindsight, we rolled over, but I was in puts, so basically I grabbed a couple of puts here, then I took one off for some profit, and then I was kind of getting waved around a bit here by this choppy action. But what kept me confident is that I was keeping an eye on what SPY and Apple were doing, and they were not showing any bullish signals, so that helped me to stay in the trade. So basically I exited the last of the position there. Keep in mind I was trading short-term options, so it's tricky to trade them. You have to be a little nimble in the sense that the premiums can decay quickly, especially if volatility starts dropping on you. So that was the first trade of the day, and it was profitable to start. So you can see here down at the bottom, 945, 190 puts, bottom at 53, sold one at 59. And then I sold another at 56 because I wasn't confident that it was going to keep going. However, obviously we saw a huge move there, and it actually went up to 65 was the high. But whatever, I still locked in some profit, and that's what counts. Next trade was on ROKU. Let's look at ROKU. Now, I traded it with calls, 125 calls, and ROKU was interesting because we were in a downtrend previously, and then we were coming down here and trying to form a higher low. I was watching this action, and I saw that based on what SPY was doing, the general direction was probably bullish at the moment. So I decided to get long here, although it was a little tricky because as soon as I got long, it was kind of, those premiums were getting whipped around a lot. As you can see, volatility stayed pretty steady, so that wasn't really the bad thing. But the thing is, just be cautious when you enter these things, and try to prefer limit orders than market orders, unless you're getting in with a market order where you think there's a huge liquidity sweep about to happen or something. That's a different thing, but generally you want to prefer limit orders, and you want to prefer scaling in. So you might get into half your position, chill out for a little bit, look at what the market maker's quoting, and then you might add another one you see a little lower or something. So it's kind of just some important methods. You got to work with what the market maker's showing on the quote screen, okay? So that ended up being profitable, but it took a little while to be profitable. So I got in first at 59, and then as you can see, that was at 10:13 a.m. and then I had to wait all the way until 10:30 to sell these for a profit at $62, $61, and as you can see, only a couple of dollars there. Not a big profit at all. And basically I was just tired of waiting around. I was tired of the market maker just whipping around these prices. So I just put a limit order to sell at the ask, and eventually it got filled when it started to break above here. Now just keep an eye on this. So 10:13, I bought these at 59 at right here. 10:13, I got long right there, these premiums at 59. Now check this out. How is it that I sold them at 10:30? Roku was trading at 116.50, and I had bought them at almost 115.50, so there was a whole point of profit there. But how is it that I only took $2 profit on each contract? So guys, that's options for you. It depends on the demand of the options. It depends on volatility. As you can see, volatility was not increasing here. It was flat. So those premiums were getting whipped around. And I don't know what it is, but I also think that time decay plays a role in these options. So if you just look at the 125 calls on Roku are decaying at $30 a day, which means that if you do the math, you're losing a couple of dollars every hour or so. So it's not that much. So especially if you're scalping, it's not that much, but you still got to keep that in mind that these market makers are slowly decaying their premiums. So that's why it becomes a little tricky to trade options. That's why I highly recommend limit orders. Okay, so that was the second trade on Roku. So 2 green trades at that point. Then was the train wreck trade, which I'll tell you about here. So Facebook again. Yesterday in my trade review, I was speaking about trading credit spreads intraday and how to trade them. Basically, you need as tight of a spread as possible, okay? And a lot of stocks don't have that. Like if you pull up a credit spread on, say, Netflix or Nvidia or Tesla, no chance you're gonna have smaller than a 30-cent spread, which in my opinion is way too wide, okay? So these Facebook spreads, their spread is approximately 15 cents on a credit spread, okay? On any spread, on any options spread you make. So just to show you here again, so if I pull up Facebook and I make a strategy here, let's say I sell this one and buy that one, you'll see that the spread is 5 cents at this point because the options are closer to their intrinsic value because these expire in a few days. They're more volatile, and as you can see, the spread is relatively tight. If I do the same thing on, I don't know, Netflix, for example, you can see here, I'll pull up the same sort of spread and you can see that the spread is from 125 to 90. That's way too wide, okay? So that's the general concept I'm talking about. Okay, now let's get to the trade here. So with the trade, basically my thesis was, look, I was watching Facebook and I said over 250 cents, generally, I want to be long, okay? And as you can see, once we started to break above that, there was some momentum to the upside. So I tried to go long, but I didn't realize that I had sold to open the spread instead of buy to open the spread. What that means is that what I initially intended to do was, I'll show you on the options chain so it doesn't look confusing. What I initially intended to do was sell this option and buy this option to create a credit spread where you have time decay on your side and you have approximately at between a 10 and a 13 delta. Okay, and as you can see, the spread is relatively tight. So that is not a bad trading instrument. So in order to open this position with Interactive Brokers, you need to buy that position and it will sell the 197.50 puts and buy the 195 put. Okay, but what I accidentally did was I pressed my hotkey for sell limit and then I filled the order with a sell limit of my position. So when I got into position, I was like, wow, it filled so quickly. Awesome, great. And then it took me a while to realize when I looked in my portfolio, I saw the theta number as negative. And then I realized that it had done the opposite of what I wanted to do. So what it actually did was it bought the 197.50 and it sold the 195. So I was short the credit spread that I wanted to be long. You get it, okay? So I was reversed the position I wanted to do, okay? So there you have it, guys. So just like those kinds of trading mistakes, like there's no room for that. There's no room for those kinds of mistakes here, guys. Like, anyways. So those are pretty much my trades for the day. So actually, no, there was one last trade here on Facebook. So as I saw this here, I thought it was likely that Facebook would continue lower. So I got long those puts again, those 190 puts. I got long them around $40. I only got long one because I only got filled on one for some reason. And then I just got out for a few dollars profit. So that's the thesis, guys. So if there's anything you can learn from this video, it is to stop trading once you've traded past 11 or so and analyze what just happened, especially if you made trading mistakes, and reestablish and come back tomorrow with a fresh, clean slate. And I love it, guys. I'm a day trader at heart in the sense that I don't want to care about the markets after 4 p.m. I want to do my thing. I want to play music and just enjoy my life. I don't want to have to look at what the futures are doing. You know, I want to look at tomorrow morning when I get up, set up my game plan and everything's cool, you know? Every day is a new day. We learn every day new things about the markets. And that's it. So I'm not in a rush to make money, and you shouldn't be either, because trading is an everyday game and it's a marathon, not a race. All right, guys. So I will see you in the next video. Cheers. Enjoy yourselves. Bye.